Welcome to Mauuak Saving Tips. Today I dive back into the world of Bitcoin mining after 2 years to see if it's still profitable. Bitcoin mining has been a buzzword in the cryptocurrency space for years, with many enthusiasts jumping into the fray to get a piece of the action. At its core, Bitcoin mining is the process of validating transactions on the Bitcoin blockchain and rewarding miners with newly minted coins. This process not only secures the network, but also incentivizes participants to contribute their computing power. The concept is simple. Miners compete to solve complex mathematical puzzles. The first to solve it gets to add a new block of transactions to the blockchain and is rewarded. The mining landscape has evolved significantly since Bitcoin's inception. With the network difficulty adjusting to reflect the growing number of miners and their collective computing power, this difficulty adjustment is crucial, as it ensures that new blocks are added to the blockchain at a consistent rate, regardless of the number of miners. It's this dynamic that makes Bitcoin mining both fascinating and challenging. Over the years, mining has become increasingly sophisticated, with miners investing in specialized hardware designed specifically for this purpose. These machines, known as ASICs, offer significantly more computing power than traditional CPUs or GPUs, making them the go-to choice for serious miners. The investment in such hardware underscores the competitive nature of Bitcoin mining. The competition isn't the only factor at play. The environmental impact of mining has also come under scrutiny. The energy consumption required to power these massive operations has raised concerns about sustainability and the environmental cost of producing Bitcoin. Despite these challenges, the allure of mining remains strong, driven by the potential for substantial rewards. In recent times, Bitcoin miners have faced a perfect storm of challenges. Increased competition has driven up the network difficulty to historic levels, making it harder for miners to solve the mathematical puzzles and validate transactions. This heightened competition means that miners need more powerful hardware and more energy to stay competitive. The rising energy costs have been a significant pain point. As energy prices have surged, the cost of running mining operations has skyrocketed, eating into profit margins. Miners have had to get creative with their energy sources, seeking out cheaper options or even more efficient hardware to stay afloat. Market volatility has been another thorn in the side of miners. Bitcoin's price has fluctuated wildly, impacting the rewards miners receive for their efforts. When the price is high, mining is more profitable, but during downturns, it can be a struggle to break even. This unpredictability makes planning and strategy crucial for miners. The combination of these factors, increased competition, soaring energy costs, and market volatility, has led to a significant shakeout in the mining industry. Many smaller miners have been forced to exit the market or scale back their operations, leaving the field to larger, more well-heeled players. Despite these challenges, mining continues to attract interest. With new players entering the fray and innovative solutions being developed to address these issues, the resilience of the mining community is a testament to the enduring appeal of Bitcoin and the belief in its future value. The past 2 years have seen significant changes in the mining landscape. The network difficulty has continued to climb, reaching new heights as more miners join the network. At the same time, the block reward, the number of new Bitcoins awarded to miners for each block, has remained constant, but the value of those Bitcoins has fluctuated. Bitcoin's price movements have had a direct impact on mining profitability. During the bull run, mining was incredibly profitable, with miners making substantial returns on their investments. However, as the price has corrected, profitability has been squeezed. The changes in difficulty levels and rewards have also played a crucial role in shaping mining returns. As the network difficulty increases, the rewards for miners decrease, assuming the price of Bitcoin remains constant. This dynamic has forced miners to adapt and find ways to stay profitable. The impact of Bitcoin's price fluctuations on mining returns cannot be overstated. When the price surges, mining becomes more profitable, and when it drops, profitability suffers. This relationship underscores the interconnectedness of the cryptocurrency market and mining economics. To stay competitive, miners have had to invest in more efficient hardware and explore new revenue streams. Some have turned to alternative cryptocurrencies or diversified their mining operations to include other types of digital assets. The reality is that Bitcoin mining profitability varies widely depending on several factors, including the cost of energy, the efficiency of mining hardware, and the current price of Bitcoin. For many miners, the key to profitability lies in optimizing their operations and minimizing costs. So, is Bitcoin mining still profitable? The answer depends on your specific circumstances. For those with access to cheap energy and efficient hardware, mining can still be a viable venture. However, for those with higher costs, it may be more challenging to make a profit. Data suggests that miners who have invested in the latest generation of ASICs and have managed to secure low-cost energy are still seeing healthy profits. For example, some large-scale mining operations have reported profit margins of 20 to 30%, depending on their specific circumstances. However, these are the exception rather than the rule. Many smaller miners, or those with less efficient setups, may find themselves struggling to break even, especially during periods of low Bitcoin prices. In conclusion, while Bitcoin mining still offers opportunities for profit, it's clear that the landscape has become much more challenging. The combination of increased competition, higher energy costs, and market volatility has squeezed profit margins. To summarize, the key points are that mining returns have been impacted significantly over the past 2 years, largely due to changes in network difficulty and Bitcoin's price. Profitability varies widely among miners depending on their operational efficiency and access to cheap energy. The future of Bitcoin mining looks set to be shaped by further innovations in hardware and energy sourcing. As the industry continues to evolve, we can expect to see new solutions emerge that address the current challenges. If you have any thoughts on Bitcoin mining or have experiences to share, please comment below. And if you're interested in staying up to date on cryptocurrency trends, be sure to check out our next video on the future of altcoins.